You most likely have no idea what a certified divorce lending professional is or why it matters to you if you own a home during divorce. And today you're going to learn all about that with Mike Foote, a CDLP whose practice is focused on helping divorcing homeowners make more informed decisions regarding their home equity solutions and building the divorce team they need to help identify potential conflicts between the divorce settlement, the mortgage, and the real property. Stay tuned.
Welcome to the Starting Over Stronger show, where you'll find help and hope for your divorce survival and recovery. Divorce well, live well.
Welcome back to the Starting Over Stronger show. Today, we are here to talk about divorce mortgage planning, which is a holistic approach to evaluating mortgage options in the context of the overall financial objectives as they relate to your divorce. And trust me when I tell you, it makes all the difference for you as you go through the divorce real estate decision-making process. And today, I'm going to have a conversation with Mike Foote. He's a CDLP, which is a certified divorce lending professional. Welcome to the show, Mike.
Thanks for having me.
Yeah, great to have you here. Tell us more about you personally and professionally and what led you to become a CDLP.
My name is Mike Foote. Obviously, I'm a sales manager at American Financial Network here in Kansas City, which is a nationwide mortgage company. This is our Kansas City branch. My certification is CDLP. We call it Certified Divorce Lending Professional. That's certifications issued by the Divorce Lending Association. So it's something that we have to train for specifically. I don't get to just call myself that. I have to take a 40-hour class, and then we have recurring whatever education.
Jeez.
You think I would know? And it's something that we're kind of advocates for divorce mortgage planning. And so say advocate. I'm not an advocate for divorce. I was a child of divorce. And so I really just wouldn't wish that on anybody. I've had a lot. So I've been in Kansas City my whole life, except for, I was in the Navy for 4 years, but I came back and, have been married. Personally, I've been married 37 years next month.
Very good.
It's a long time. And, we're still in testing phase though. Still the initial.
Try it before you buy it.
Still on probation. But so no, the thing I've been in the lending business. We've seen so many things that come and we get it dropped on my desk after the fact. So it's been through everything. You have mediators, attorneys, and you have attorneys who tend to, and I'm not knocking attorneys, but I'm just saying there's a lot of attorneys out there who tend to, cut and paste a divorce settlements agreement.
Yeah.
So they're going to drop this language in here and this is what they've always done. And that's what they always do. So what happens then is it gets dropped on my desk and spouse is going to buy a house. And when she comes to me and she doesn't have any income that I can't qualify, no qualifying income, or she, is still attached to the other house in some way or debt, or there's so many different nuances there. And that's one of the reasons one of the things that led me into this niche was that, I try to head some of that off at the pass. We're never going to fix it all, but try to head it off early before the judge signs it. Help everybody we call it a successful divorce. Yeah. So, successful as far as both parties are close to whole, or at least on their way, on their path back to whole. Like that's kind of without coming to litigation. And then coming in after everything, you think everything's done, and then you go to buy a house and you can't qualify because of what's in that divorce settlement. So I've seen that over and over and over again. So
yeah. So would the fact that you're a child of divorce be related to your why for becoming a CDLP?
Yeah. And I think probably it does. It's just, obviously I was really young at the time, and I was about like 5 years old, I think, but when my parents got divorced, but it's a thing that lives with you forever. Like I'm 57 now. So it's like, it's still a thing that I have issues with those. You deal with that all the time. And my daughter's divorced. and I'm, I'm watching my grandkids deal with that stuff. And it's something that, I mean, obviously I don't have any part of any of that with the kids, but if I can help make it a little bit easier, maybe a little bit smoother, because it's a very emotional time. It's very hard on everybody involved. Yeah. And maybe I can lessen the pain a little bit, or at least set you up for when I try to be the voice of reason, and maybe I can help you set things up to come out of it as on your way, on your way, get that behind you and get it on your way.
Yeah. Well, the mortgage process is always messy, especially the closer you get to closing day. And so adding a divorce into that just
throw the two together, right? It's like probably the two most tumultuous things you can do. And then you throw them together at the same time.
Yeah.
And I've always kind of thrived in the turmoil. I think my wife says I love to stir stuff up, but like, it's just if you have the two together, and I've seen people, and I know you guys focus a lot on women, and I've seen a lot of women who it's so overwhelming, and the whole divorce situation is overwhelming. And then you throw the mortgage situation in there. It's also overwhelming. And there's two things that you almost can't control at the same time. And I've seen it so many times where they're like, I don't care. I don't care. I just want it done. I just want it all done. And I'm trying to tell them, like, no, that's not me. I know this is hard. And I know the whole thing sucks. And I know you don't know me from Adam, but just listen to me. There's like, just hold on. Like, just hold on. Like, just hang tight, and let's do a couple things. And then I've had people come back and be like, oh, thank you. Thank you for doing that. I'm glad I listened to you.
Yeah, people need more helping professionals like that in the whole mess. You're a lot like me. I've had somebody say about me that I'm that friend that runs into the burning building when everybody else is running out. And I'm like, yeah, I guess so.
Yeah. And it's funny because I get all this stuff sometimes, and just in the mortgage business alone, it's very, it's high stress. It's just like, you just get wound up sometimes. It's just so much stuff going on, and last minute, and everybody's yelling at you, and, everybody's freaking out.
Yeah.
And I'm
happy.
And it's like, it's funny though, because I used to, 15 years ago or something, as a mortgage, doing that stuff. Like, everybody used to drink, everybody used to do whatever. Like, that's what we all did. I don't do that anymore. I haven't for a really long time. And it's funny because the stuff doesn't bother me anymore. So it's like, you just deal with, it's probably because I'm old now. I get the old man wisdom, but like, you just, like, there's so much stuff you cannot control, that you can't deal with all that stuff.
Yeah. So, you mellow out when you realize,
I guess,
how little you actually can control.
And it's like, so there's so much. And like I said, I really do feel for people that are going through it.
Mm-hmm. That's the important part.
And the other thing is everything's different. Every single one is different. And I hate monotony. And, you start dealing with divorces and things like that. Like,
I think if you hate monotony, you have picked the perfect career.
Right?
Probably never seen the same thing twice.
Never.
Could you tell us a little bit about the training to become a CDLP? I know you said it's a 40-hour course. Obviously, we don't need any details about all the training and all that, but just kind of what you learned to focus on that you maybe weren't looking at so closely when you were just doing general mortgage guidance.
Yeah, and it's funny because I didn't even know it was a thing. I got introduced to it through a friend, and I started looking into it, and I was like, well, that's kind of neat. And so I went down to the course, went down to Scottsdale.
Mm-hmm.
And I just kind of thought, like a lot of these associations and real estate does the same thing. Come down here and spend a week and write the whole thing off and have catered food, and you can get the sticker and you'll be all done. So I kind of thought it was going to be like that, right? I'm not going to lie. And then, but when I got down there, it was just Jody is the president of the Divorce Lending Association, and she has been focused on it for like 30 years. And she just started throwing this stuff at us, and it was just unbelievable. All the things I learned stuff. I've been doing mortgages since 1997. So I learned stuff that first day that I was like, holy crap, I didn't know that.
Yeah.
So the way that you can tweak things to make them work for someone who's in a divorce situation that you can't do, one, you can't do on a normal refinance or something. And two, 95% of loan officers have no idea that you can do it.
Yeah.
And so the information is there, and the way that you can structure these things and try to make every single one is like Rubik's Cube. And we're trying to twist and turn and do and tweak and everything to try to make everything work. Because if it's income, it's the property, it's the title, it's the, you have the appraisal, you have all these different aspects of the whole thing. And you try to jam them together and try to make it work, try to make everybody happy.
Yeah. Well, I'm glad you did go and take it, because I have been trying to connect with CDLPs for going on 4 years as a divorce focused real estate agent and just, coming up dry left and right. There's just not a lot of you out there. So I want people to understand why working with a CDLP is so important over just any other mortgage professional, because just like with me and the training that I got in divorce real estate as an RCSD, I learned, just like you described, I learned things on that trip and that training. I was just like, oh my gosh. And I'd come back and talk to other agents about it, and they'd be like, oh, I've never heard of that. I didn't know that, so there's just so much to know. You can't know everything. So that's why specializing is so important, and why when you're going through a divorce, it is so important for you to select someone who specializes in what you're going through. So when do you usually step into the process with a client?
What we've been doing is like, I typically have an attorney will call me and say, this is what I've got. Like I have this, or mediators also. Like I said, everybody's got a story. So there's always a setup. There's always an attorney or somebody telling you, hey, I've got this. One spouse is doing this. One spouse is doing that, and here you go. And then I usually tell them just the same thing, just have them call me. Like, call me, let's talk it through and see what we have going on.
Yeah.
The attorneys that I work with on a regular basis, that's what they know. They've kind of learned to call me early, and let's see, because maybe typically in these situations, what I've seen a lot of is, and it's a factor in the divorce, is there's a ton of debt. Right. So there's a ton of revolving debt. There's a ton of installment debt. There's all kinds of stuff. They've got a first mortgage. They got a second mortgage. They got 2 car payments. They got 42 credit cards. So, and and I look at their credit report and I was like, well, this could be part of your problem. Money is a huge issue, and debt is a huge source of stress. So if you guys are squeezing out to make these payments. So what I try to do is look at what we're going to do. One's going to pay this, husband's going to pay this, wife's going to pay this, and then see if I can qualify the spouse that I have in the scenario that they're giving me. So hopefully we can do it early. And then I usually report back to the attorney and say, okay, this is what I got. And in order to do this, we're going to have to pay this, whatever the scenario may be. And can you guys work with that? Is that something that we can do?
Yeah. Well, obviously the sooner the better. That's probably true with any of the helping.
Because after the judge signed it, judge, it's done. Like it's, and the other big thing is like, I think the last report I saw was like 68% of average Americans' wealth is tied up in the equity of their house. So that is why the house becomes such a huge issue in the divorce, because that's where most of their equity is. Most of their wealth is in that equity of that house. So that's what turns it into a giant issue, and why they fight over it. Yeah. Because of that.
Do you work with both spouses then? Because if you're getting a call from an attorney, that attorney is just representing one side. So do you work with more one than the other? I mean, obviously it's best if you work with both, but what if one's cooperative and the other isn't?
Yeah, I usually do that. I usually tell people like, I am a neutral party. Like I have, responsibility to do the right thing. So I typically just work with one, and it seems to be a lot whichever spouse is keeping the house. So, and that's a step one for me, because I've got the attorneys sending stuff over saying, okay, this person wants to keep the house. Can they qualify for the mortgage by themselves? And that's because that's a big step for me, because most of the stuff that I've seen in the past, they do that. I literally have a guy, my wife's friend, she works with my wife, and she came to me and she's going to, husband was bringing zero to the table. Not zero, probably not zero, but throughout their marriage. And she finally got fed up with it. And so they went to, and I got in this after, right? Way after, way too late. And she said, "Oh no, we're just using his attorney. We're both going to use his attorney." Right. Okay.
Red flag number one.
And I told her, like, that's not your attorney. That's his attorney. You're just agreeing to their terms. So, but they agreed that the husband was going to keep the house. Husband that didn't bring anything to the table was going to keep the house and refinance it in 6 months. And she was going to move out and buy another house.
Sure he was.
So literally the guy's a beekeeper. The guy sells honey. Right. And so that was the whole problem, was he didn't have any income. He wanted to bring the income to the marriage, and they got 2 kids, and she got tired of carrying all the weight, coming home, doing all this stuff. So now it's been 3 years, and
he still hasn't refied.
No, still selling that honey. And so like I told her, later, like, that you didn't both use his attorney. I mean, she wasn't both of your attorney. That's what she said. She's just our attorney. And I said, no, that's his attorney. You're agreeing to their terms. So step 1, don't do that. Yeah,
right. And that, I mean, that's a story I've heard so many times. I mean, there's precautions that can be taken on that, where you can, put in time frames. It has to be refinanced by, 60 days is more than enough time to get it done.
Sometimes, yeah. And that's if we're in on the deal ahead of time, then yes. Yeah. But even then, there's so many more. So now we get into the issue of support payments or any of that. So that's the other thing that we look at is, okay, so maybe the husband's got a huge 401k. And I always say the husband and wife just because, like, whatever, you know what I mean?
Yeah.
Like, it's typically how things go.
We use stereotypes.
I'm not trying to be stereotypical, but I am a simple
stereotypes
man.
Are stereotypes for a reason.
I am a simple man with limited brain capacity. So say the husband has a big 401k and he's going to pay her a lump sum. Yeah. So maybe she hasn't been working. She's been home raising the kids. And so she's like, cool, I'm going to have $500,000. The problem comes in when she's like, okay, I got $500,000. I'm going to buy this house. I need a mortgage. I'm going to keep some and I'm going to put, $100,000 down. You don't have any income. Like, you have money in the bank. You don't have any income. Yeah. So, for qualifying purposes. So there are programs out there where they call it, where they diminishing assets, and they take your assets and they say, oh, divide it by whatever. And this is how much we're going to count per month. They're terrible. No, not terrible, but they're not the best programs rate wise and term wise and all that stuff. Yeah. So the problem becomes, if we can get involved in that first, if I can get involved in that up front, and we say, hold on a second, let's split this up. Like, let's make this support for a while because we have to have 3 years continuance after the loan is done. I have to show that you're going to receive those payments for 3 years. So let's split that 500,000 up, and let's say she needs this much money to qualify, and we will put that much money in a alimony trust or a revocable living trust or something to pay it out every month, or pay support payments every month in that amount until whatever, and then you can qualify out. So there's a lot of different things like that, and normal people had no idea that like anybody it wasn't in our industry would think you're nuts if I told you don't have any income. You got $500,000 in the bank. If you don't have any income, sorry, Right. And I've told people that.
There's divorce professionals, and I've been associated with some with recent cases that should know better and do not know the difference between an asset and an income, and will argue that, a woman who's going to get a equity split of $150,000 will be able to go out and rent or buy with no income. And I'm like, do you not understand that those are totally different things?
I had one that's just $2 million in the bank, $2 billion that she got out of her settlement. And I was like, sorry. I mean, that'd be nice. I wouldn't mind having $2 million in my bank account, but can't use it.
At that point, just go buy the house.
That's what I told her. Go buy it if you want to refi later. Yeah. Or take, she could take a distribution. She was all in an investment account. So like you could do one of those, you could do a margin loan or something like that and you'd be paying yourself. But it was the same thing. Like, she's like yelling at me on the phone because I was like, you don't have the income. Like, you have an asset, you have money, but you don't have any income.
Today's show is sponsored in part by Mike Foote. certified divorce lending professional with American Financial Network in Kansas City, Missouri. Mortgage and divorce are hands down two of the most difficult processes any of us will ever face. So you can only imagine when you combine the two, how complex it could be and how important it is to work with a certified divorce lending professional who can help you make more informed decisions regarding your home equity solutions and to identify potential conflicts before they occur without billing you for every hour of his time. Mike is not a stuffy banker or a pricey attorney. He is your friendly voice and helping hand. And best of all, he actually answers his phone and cares about what you need every step of the way. Call Mike today at 816-456-2678 and visit divorceloanhelp.com to learn more. So could someone who wanted to keep the house refi before the divorce is final?
They can. Yeah. I mean, so there's ways to do it. In Missouri, here you could sign a waiver of marital rights. I think Kansas allows you to do that too. I don't really know about any other states, but the problem with that, I mean, and those are okay, and they'll work for the mortgage, and you can do the mortgage purposes. Mm-hmm. And I'm an attorney. I'm not an attorney. I'm not giving legal advice, never. Yeah. But the problem is like I'm always like, what could happen probably wouldn't happen. It may not happen very often, but it could happen. Is you buy a new house or refinance a house, because you can buy a house in Missouri with one person on the note. Mm-hmm. Yeah. Kansas too. So problem wouldn't happen is if, say, something happened after the fact. So you're still not divorced yet, and spouse signs a marital waiver, and you refinance the house, but then you get into whatever, you might get something else happen, and then the judge says, no, that's not an equitable thing. I don't think that's fair. That division wasn't equitable, even though the other spouse signed it, and the judge can still screw the things up. So so when that divorce is final, he can still put something in there that would be in there after the divorce, after the waiver, and it may still be okay, but it still could muddy up the waters. So your best case scenario is get the agreement signed and then do what it says. But the key is setting it up the first place to be what you need to be. The other thing is debts, credit cards. So like everybody's got credit cards and car payments and stuff. So typically, and I had one, I don't remember, major divorce law firm that's nationwide. Mm-hmm. And it literally said like husband's going to pay Discover and wife's going to pay Visa and da-da-da-da-da. Well, they had more than one Discover, right? So he put husband's going to pay Discover $4,300. Wife's going to pay Discover $2,200. But the account that was $2,200 balance. So the problem is that, like, they don't specify and clarify that this is account number 1234. The husband going to pay this account. This is account number 5678. Wife's going to pay this account. So the problem lies when you go to refinance him. I've got to count all of that, everything as his debt. He's responsible for it, even though it says this. It's not clear. So you have to count that in his debt to income ratio, and it just throws everything off. So a little bit of clarification goes a really, really long way.
Yeah. I mean, communication is everything. And that's what's most lacking. And I think most of the time is the people aren't communicating, that obviously the spouses aren't communicating well, or they wouldn't be getting a divorce. And sometimes their attorneys aren't communicating well with each of the parties and or each other. And it just, it all gets very, very muddy. And so that's why, working with someone like you is so important, because, there's so many different factors that can very easily get missed. And some of them might not be a big deal, and others might be life altering, like major big deals. Right. So definitely helps to work with somebody who knows all of the nuances of divorce and mortgage. And, so I pulled a quote from the, what's it called? The Divorce Lending Association, right? Your credentialing association for the CDLP. President and founder Judy Bruns had a quote on the site, and I just want to offer that and get your thoughts on it. You said earlier the house is 68% of the average American's net worth. So she goes on to say, so when real estate and mortgage financing are a focus of the divorce mortgage planning becomes very valuable to the divorce team, the spouses, and the divorce overall. So one's ability to apply a holistic and ethical approach to home equity solutions is critical. You can't think traditionally when working with a divorce, real property, and mortgage financing, but your knowledge and understanding of how intersected family law, financial and tax planning, real property, and mortgage planning truly are is what enables you to observe, your clients, Mike. So how would you elaborate on that vision and purpose and what the CDLP offers to people going through divorce with a house?
One of the main things and it's one of the things that I learned at this deal that I had known being doing mortgages forever, right? One of the simplest things is how you structure, let's just say in a refinance, and we're going to buy out the spouse and do an equity buyout. So Fannie and Freddie, FHA, VA, they all clarify and specify the difference between a cash out refinance and a equity buyout. So a lot of people who don't know, a lot of loan officers, if you call up the bank and you say, I'm getting divorced, I have to pay my spouse, whatever, $25,000, that loan officer, unknowing, not knowing, is going to say, okay, well, that's a cash out refinance. And you can only get 80% of the appraised value of your house for that, right? That's common knowledge in the industry. Yeah. So as a CDLP, we learned that, and it's in the guidelines. So anybody who knew the guidelines could know this. But the other thing a lot of loan officers will tell you, will say that it's an equity buyout, and they use the keyword buy, and they say you have to purchase the house, and therefore you have to purchase it from them, right? So also incorrect. So if you're on title, as long as you're on title for 12 months, the person who's refinancing, you can do this. Equity buyout says I can treat it as a rate and term refinance, which means I can get a better interest rate and I can get a higher loan to value. So my house is worth $100,000, and I'm saying $100,000 because that's how I can do the math. So if I don't have enough fingers, so if the house is worth $100,000, now I can borrow 90% of that value for an equity buyout at the rate term interest rates. I don't get penalized for going over 80%.
Yeah.
If it's a cash out refi, I can only go to 80% of the value, and I get penalized on my interest rate for having a rate term. So what that does is just saves you, one, it saves you a ton of money. Two, it allows you to access the equity that you need to pay that spouse off. Because sometimes they only do 80%, next thing you know, you're doing a home equity line of credit to get the rest of the money to pay them off. And so there's a lot of things like that we go into and look at from a different angle. Yeah. Divorce related. Income and alimony and stuff like that are also other things. Traditional loan officer look at alimony payment as a liability. And they're going to take that and they're going to say, you make X number of dollars, and now I'm going to take this alimony payment and deduct it from your income, and that's going to be included in your debt ratio. And that's not how we do it. So what they actually allow you to do is deduct the alimony from your income before you calculate the debt to income ratio, which lowers the debt ratio. It's a completely different way to look at it. Yeah. And and when I say that most people don't know it, the company that I worked for, I had a loan that we did that for, and the underwriter said, what are you doing? Like, what are you doing? You can't do that. And I said, yes, you can. And I said, here's where you find it, and go look it up. And they sent the thing back to me like an hour later, like, wow, I didn't even know you could do that. So, right. So I was like, man, I should have bet her money. I should have bet her $100. But, so that is just, it sounds nerdy mortgage stuff, but that's the things that you need to kind of know to go into this deal, because it's a whole, like I said, it's a whole new world. Every deal is different. And everybody's got their own things.
There's just, obviously listeners can hear there's a ton here to learn and to know. And how could you know it all when you're not even in the industry, when most of the industry professionals don't even know it? So, you need a CDLP if you've got this issue going on during your divorce with the house. So what else? Is there anything that we haven't covered that you would want listeners to know about the CDLP process?
One of the other things that, and I tell attorneys and stuff this all the time, but because also when you enter into the divorce arena, you realize that it's an expensive undertaking, and you start talking about billable hours and things like that. All the services that I do I don't charge people. I can't charge people the equal credit opportunity. So I tell people, I'll be your resource. I will help you out, and I don't charge a fee. My company pays me to close loans. So that's when I get paid, is when the mortgage is closed. So if something happens and you come to me and it doesn't happen, it doesn't happen. Like you, a realtor, that we do a lot of stuff for free. And this comes with the territory, and it's just part of the game. But so a lot of people can't understand, can't comprehend that.
Yeah.
But so people can reach out and ask me questions all the time, and it's free. It's free. I work free.
Yeah. Yep. Yeah, that's for sure. And, on top of that, your attorney is a legal professional. They're not a mortgage professional. They're not a real estate professional. They're not a financial professional. So stop using them like that, because you're paying more money and getting worse advice, frankly, in most situations, because that's not their industry. So, utilize them for the legal aspects of your divorce, and then utilize the other resources on your team to lower your costs significantly of your divorce. And obviously that includes a CDLP in this case. So
this is what I tell people, right? You don't want to come to me for legal advice, right? So don't go to him or her, your attorney, for mortgage advice, because we're on the same scale. I know as much about the law as a lot of them do about mortgage stuff. So, stay in your lane, man. And I don't try to get into their lane. And, most of them have mortgages, they're not any different than you when it comes to getting a mortgage. I've done mortgages for attorneys. They're just the same as all the rest of us. They don't know any more about it than you do. Yeah. So, don't come to me for legal advice, except if you need an attorney referral. I can price it you up, but don't come to me for legal advice, and don't go to them for mortgage advice.
Absolutely. Well, if they do want to get mortgage guidance for their unique divorce concerns, how can they reach out and learn more from you, Mike?
They can go to my website. I got a couple of websites, but probably the one of our applications and stuff is just my name is MikeFoote.com. I have, if you want some informational articles and things on divorce, and there's just a ton of articles on my divorce website, which is divorceloanhelp.com. And there's just, you can just sit there and read articles all day long and learn all you want to know about divorce on that thing. Stuff that you just never thought about. But that's how the business is. That's how the divorce industry and arena is it's just crazy stuff all the time. So things you would never think about.
Very good. Well, thank you for being here and sharing your thoughts and experiences with us and listeners. Hopefully you caught that. Mike Foote, FOOTE.com, or divorceloanhelp.com if you'd like to learn more. And I hope this has offered you some great insight on your situation today. Thank you also for following Starting Over Stronger on Facebook, LinkedIn, Instagram, and TikTok. If you need to know where to find me on any of those channels, let me know. You can connect with me at startingoverstronger.com. And I just thank you for being here, for following my work as I strive each day to bring you the help and hope you need as you go through the divorce. And I want to thank you also for sharing each episode as you listen so that others can find this help and hope too. Thank you again, listeners, for joining us today. Remember, doing divorce alone is not recommended. Reach out. There is help as you divorce and hope as you are starting over stronger.